In this presentation, we will record transactions related to cash received from grants on account, as well as grants that are not on account. In other words, grants that have been recorded in the past as a receivable and grants that have not been recorded in the past as a receivable and therefore will be some type of income in the current time period within QuickBooks Pro, QuickBooks Desktop. We are in our not-for-profit crafts file. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open window list. We're first going to open up our trial balance. That's going to be our default setting as we go through this. So we're going to go to the reports dropdown. We're going to go to the accounting and taxes. Take a look at that trial balance. Now I'm going to try to adjust the size of the font on the trial balance all the time. So I'm going to go to the customize reports, and then the fonts and numbers, and then I'm going to make the font size, let's go to 11 on the font size, and all fonts, yes, and okay. I'm going to then change the date up top from 01/01/20 to 12/31/20. So there's going to be our trial balance. And now let's take a look at Excel and see what our objective is, and then we'll see how we can do that within the QuickBooks system. So we're going to say that we have our not-for-profit organization. We're going to be concentrating in on those increases, the cash increases, the revenue type of activities within the not-for-profit here. So the first thing we're going to have is we're going to say that we got a grant money was received. So we got the grant money, and we're going to say first that we have grant money that was received on account, meaning they owed it to us in the past, and now they're going to pay us that money. So if we look at then our financial reports in our system, our trial balance here, we're going to say we have grants receivable. They already owe us money that we had recorded in the prior period, and then now we're getting that money. Therefore, we're going to reduce the receivable here and record the cash. In debit and credit format, it would look something like this. I'm just going to say this equals the cash, which started at 2595, ends at 7695. Then the grants, I'm going to say, is equal to this. And that means it started at 5800, and then it went down to 700. So how can we do that then in the QuickBooks program? Typically, if we go to the forms we're not going to use a journal entry to do it. What we're going to do instead is use the receive payment item. And this would be the normal kind of transaction if we select the receive payment. So we'll typically have the invoice, receive payment, then make the deposit. We're going to go into the receive payment. We're going to select the item or the receive from. That's going to be from grants. So we set it up as just grants as the customer. So kind of a generic name here, but we got the customer. Then we have the invoice down below that is connecting to it. If I double click on it, that will take us to the actual invoice. So here is the invoice. Closing that back out, we're now receiving payment on it. I'm going to check that off and say yes. Now we didn't get the full payment, however, we only got the 5,100. So I'm going to make this amount then 5100. We can put the form of the payment and the check number if we have it. Now a payment receipt type form will record the transaction as a default within QuickBooks to increase undeposited funds, and it'll decrease the accounts receivable and apply it out to the customer account as well as to who paid us. So let's see that transaction. We're going to say save and close, and yes. And then we're going to say, okay, what happened? You'll see we have a number 1 here, meaning there's one item we need to deposit into the bank. If we go to the trial balance, we'll then say, all right, in the trial balance, I'm going to make this large again. I'm going to go to the customize, going to go to footers. I'm going to make this up to number 11 so we can see it a little bit more clearly. So we're going to say we have then not yet to the checking account, but undeposited funds has going up. Double clicking on that, you can see our transaction down here, and that's going to be the payment that we have for the 5,100. Double clicking on that, we're going to get to our customer payment. Closing this back out. Closing this back out. Now note the names. It says customer payment. We got it, don't let that throw you off. We got a payment which from what would be similar to a customer for a for-profit type of organization, and are using, of course, that functionality within the QuickBooks system. So then the other side's going to accounts receivable. So accounts receivable, there's the payment that has been made. We also have the account tracking the receivable by who owes us the money, and that would be under the reports drop down. We're going to go to the customers and receivables, and then we can go to the customer balance detail. Within the customer balance detail, we have that same information, the customer name here being Grants. So then and that means we're tying out to that 700 again. Closing this back out, back to the trial balance. Note, cash was received there, but we didn't actually make any revenue because it was earned in the past. Then we're going to record the deposit, which is going to take it out of undeposited fund, put it into the bank. The important point here is that you want to deposit it in the bank in the same format as you expect it to be shown on the bank statement. Because when you compare our books to the bank books in a bank reconciliation, you would like those two things to tie out. So that's why it goes through the undeposited funds. So take all your deposits at the end of the day, then we're going to go to the record deposit them into the bank account and say, okay, I'm going to check that off. That's the one deposit we have. We're going to say save and close. And actually, I'm going to change the date on this. I'm going to change this to the current time period. Let's make this 1 day up. So it's actually January 1st. Save and close. And then yes. Now I'm going to do actually the same thing to that for the received payment. I'm actually going to change the date into the next year. So I'm going to go to the received payment. This is how you can adjust things in QuickBooks, and you don't want to do that unless you're sure about it, but QuickBooks allows you to do that. And then I'm going to go back one. I'm going to find that payment. I'm going to put this in the current time period by saying the plus button. So it's on January 1st, 2020. Then save and close it. Save and close. So the transaction actually happens in the current year. Going back then to our trial balance, we'll see then that the checking account will be increased. If I double click on it by the deposit, you can see the name of the form that is used as a deposit here. Closing that back out, the other side then coming out of the undeposited funds. So let's go back to our QuickBooks file and say, okay, look, the next item we're going to say is happening is that we're going to say that we're going to get a grant. This time we're going to get a grant, but it's going to be unrestricted. So there's no restrictions on this particular grant, and therefore it's going to go into contributions without restrictions. Now note, there could be restrictions quite likely on grants. We'll talk about restrictions later. So this money we got from the government, and it's not restricted. We're going to say it's a government grant. So we're going to get a debit of cash, or cash is going to increase. The other side is going to go to the contributions, which is like our revenue account. So we're going to say, all right, the cash is going to go up. It would look like this. I'm going to say F2 to go inside it, F2. Or you could double click on it plus, and then I'm going to add that 7,800, which will increase the cash. Cash goes up. Then the revenue type of account is going to go up. So that's going to be in the contributions down below, the contributions without donor restrictions. So we're here in R16. Within R16, I'm going to say equals that 7,800. That will increase in the credit direction, the revenue. That doesn't mean it's negative revenue. It's going to be increased as a credit for our debit and credit worksheet. And then, of course, the net income type of account or change in net assets is going to be increasing as well. In essence, net income, kind of like on the income statement of activities, going up then. So that's going to be our transaction there. Let's try to do that then. Let's do that in QuickBooks. We won't try. There is no try. There's only do or do not. And so we're going to go back to the home page here. And what form can we use to do that? To do that, we're going to use the create sales receipt. Now, you could think about this very similar to like if you're a for-profit organization, someone is, giving you money. You didn't really do anything because it's a not-for-profit possibly that, but so it's not like that. So it's not a sales receipt for services possibly, but it's still kind of our revenue generation type of form. We got cash at the same point in time as opposed to us hoping to get cash later. This would be used for like a pledge if we hope to get cash later and want to follow up on it. This would be used for something like a cash donation up front, similar to as if we were to have a receipt that was given to us in the store, and we just want to provide a receipt to the person who, bought something in the store. So they gave us money. Now we just want to provide the receipt. So don't let the name throw you off here. Now, this form in particular, once we get the cash, is one we might want to adjust. We'll talk more about how to adjust it in terms of a template you can make in future presentations, but you might just want to change the name. It's not really, if you don't like sales receipt, which isn't, really the proper name for the for-profit, you could change that component of it by going to the customized data layout and then going up to the default title and just calling it a donation, right? And that will make that, a little bit nicer to see. And then we can say, okay, you could see some of the other fields that you can change there as well. And you can make a template. And what you want to do on the template is really make this more of a thank you letter, because you want to be able to provide this to somebody saying, hey, you provided a donation for us. Thank you. If you need it for taxes, then here you go. Here's the tax thing. You don't want to do that with an ugly kind of receipt type form. You'd like to do it with a nice thank you letter form. But even if you just put a thank you in this, kind of receipt type form, it would be, you could do that as well. And that would be fine. Functionally, though, what will this do? This is going to be increasing the undeposited funds, the cash type of account, and increasing some kind of revenue account. So we're going to put this in the books. We're going to say we got this from, I'm going to say grant to, well, let's say government. Let's say government 1 is going to give us a grant from the government. And I'm going to say quick add. Now, I'm not going to go through the whole process of adding a customer. You probably want all their data in the customer. If you use a quick add, that'll help us to just have the name so that we can record the transaction. You obviously want their phone number, their email. If you want to store that in QuickBooks or some other place, that would be great. Then you can add them to your newsletter and whatnot and all that kind of thing. But we're focusing on the transaction, so I'm going to quick add as a customer, and then we're going to put in the class, and I'm going to put everything for the revenue. Remember, what the classes are really helping us do is break out the expenses. If we can break out the revenue by class as well, and it serves our function, great. The requirement is we need to basically break out those expenses by function. That's really what the classes are used for. So the revenue, if it's unrestricted, we're going to put it into fundraising. So I'm going to put it into fundraising for the unrestricted. I'll change the date to the 2nd up top. And then we need to set up an item. Now, the items are going to be the things that are going to help us to know what account they're going to be driven to. So if we were selling things, the items would be things like the things we sell. If we sell guitars, we'd list out the guitars we sell. Here, we're going, if we have service items, bookkeeping, so on, we'd set up those type of items. Here, we're going to have items, and they're going to be driving the income account. This is going to be grant, and it's going to be unrestricted. So I'm going to call it grant unrestricted, which I already have set up here. So I'm going to call it grant unrestricted. That's our item tab. Now you might want to know, where is that item? How do you know where it's going? We will set up more items later. The items are housed in the lists in the item list. And these are the items we've set up so far. You can make a new one by saying item drop down or rise up down below and have a new item. Or if you want to see what the current item is doing, we can say this is going to be the grants unrestricted. What's that going to do? If I open this up by double clicking on it, it's going to be going to the account of grants. This is an income type of account. So when I use this item, then it will be increasing or crediting the grants account. So closing this back out, closing this back out, back to the donation. Now you might ask, well, why don't I just use the account here? Why don't I just use an account? Because you want to print this thing out and give it possibly to the donor, and therefore you want it to say what the description is that you want it to be reading on, and therefore you want to have it driven by the item here, not the account. So we have to interpret what these forms are going to basically do for us. And so if I put it in the rate, I'm going to say the rate's going to be 7,800. So that's what we will put in the rate field here. What will this form then do? Once we record it, it will increase the undeposited funds, and the other side is going to be going to a revenue account driven by here, income type of account, which will be grants. Let's check it out. We're going to say save and close, and then I'm going to say yes, because I changed the transaction. And then I'm going to go back to the trial balance. Now note this little 1 happened here again. We got that little 1 happen again. And then we're going to go to the trial balance. Then we're going to see in undeposited funds, if we double click the undeposited funds, we see there that we have our transaction, which the sales receipt listed by the name of the form, which is nice, helps us to track. Double clicking on that, 7,800. Closing that back out, closing this back out. And the other side then in grants, there's the grants, 7,800. If we double click on that 7,800, we see that transaction down here for the grants, 7,800. Closing this back out. Now the other nice format here of being able to use this form, why you really want to use it, if I go back to the home tab, why you really want to use this form is because you can also run a report by who paid you money, and you need that so that you can track who paid you money and basically have a list of that if someone asks you. So if someone was asked you, how much did we pay? We can go up top and we can say that we need the sales, and I can take a look at the sales by customer detail report. Sales by customer detail, and check that out from 01/01/20 to 12/31/20. And we can say, and then we have a list of who gave us the money. We could sort this in a various different ways that we need to, but we could basically say that the name here, and it's obviously we have the name being that's the item, government 1 being the name. We could sort again by the name. If they needed some kind of information related to it, then I can double click on that item and say, here's the form. We can simply print that form and provide it to them. Hopefully it looks kind of nice, kind of like a thank you letter rather than the form here. But whatever it is, if they need it for their taxes or something like that, we should have the record of it. So then I'm going to close this back out. We're going to close this back out. We're going to close this back out. And then the next step we want to do, I'm going to go back to the trial balance, because we don't want it to be in undeposited funds. We want it to be in the checking account. So now we're going to take it into the checking account or put it into the checking account from the undeposited funds. And we're going to do that by going back to the Home tab in the Open Windows section. We're going to then move over to the Record Deposits, which has that 1 next to it. Selecting that 1, remembering that we're going to record deposits in the same type of format as they will be seen in the bank statements, so we can compare the bank statements to our books in an easy process. That's called a bank reconciliation. So we want to make the bank reconciliation as easy as possible. So I'm going to select that one. I'm going to say OK. And there's our deposit. What's the deposit going to do? Increase the checking account, decrease undeposited funds. Let's do it. Let's check it out. Let's see if that is indeed the case or if I'm lying to you. We're going to say save and close. I'm not lying. This is what happens. I'm going to say yes. And then we're going to go back to the trial balance, and we'll see undeposited funds has now gone down. Checking account then increases. Double clicking on the checking account, we could see that increase, that being the $7,800 here. Double clicking on that takes us back to our deposit.